Paytm. They came out with their numbers on Friday, had their con call on Saturday, and we saw revenue to be largely in line with what the street was penciling in. Revenues come in at 2334 crore, which is a 15%, 51%, I beg your pardon, jump on a year-on-year basis and a 13% sequential jump. With regard to the net loss though, net loss came in at 168 crore versus what the street was penciling in at around 350 odd crore. So that came in massively positive, and even the commentary largely was positive. OPEX was controlled, which is what aided the loss after tax figure, and contribution profit jumped 23% on a quarter-on-quarter basis. Contribution margins came in at 55% versus 51% quarter-on-quarter. So going from strength to strength with regard to its profitability as well as with regard to its numbers where Paytm is concerned. Indirect expenses on the back of that grew just 16% year-on-year, maybe 4.5% when I'm looking at it sequentially. EBITDA before ESOP, in fact, EBITDA before ESOP margin has come in at 10% versus the 2% number same time last quarter, and 24% same negative margin same time last year. So you're clearly seeing that tailwind come in on Paytm. The management has guided for profitability very, very shortly, and what they're also suggesting is that they will be cash flow positive. That's more important because Paytm has 8,000 plus crore of cash. What they do with that $1 billion plus of cash is obviously a question mark. Need to wait and watch as to what they will do with it going forward, whether they want to invest it or do a buyback, which is what they've done in the last quarter. But keep your eye out, Paytm will be in focus. Now let's quickly listen in to what the management had to say on their Q4 earnings, especially with regard to profitability.
We have not given a specific quarter, but we have said that we are very close to achieving cash flow profitability. And just to be clear, the way we define cash flow profitability is EBITDA plus interest income less capex. There is also in parallel improvements in working capital that we are doing. So if you notice over the last 1 year, due to improvements in working capital, and if you adjust for the money that we spend on buyback, we over the last year have actually added to our cash. If you look at the March 31, 22 number and the March 31, 23 number. So we have also in parallel improved working capital. But when we are talking about free cash flow, we're saying EBITDA plus interest income less capex. And we are very close to being able to do that. You only need some improvement in EBITDA going forward, not very significant improvements in EBITDA to be able to get to free cash flow breakeven. At the moment, we do feel like we have a lot more cash than we have immediate use for. One of the things that we have done in the past is discuss with our board and return some of that in the form of buyback. So that would be one option on the table, and there will be other options with respect to any investment areas that we feel very strongly about.
And well, after that earnings beat, Paytm's founder and CEO Vijay Shekhar Sharma wrote a letter to the shareholders where he said that the next milestone is to make the company free cash flow positive in the near future. He added that the focus is on quality revenue, which is aiding the bottom line, and the incremental business continues to generate better margins. Now, Sharma also believes that with the advent of early stage AGI, which is artificial general intelligence, in 2023, there will be more opportunities to bring efficiencies in the business and AI-first offerings. The company's technology teams have already started to see encouraging results. Sharma sees AGI as something like smartphones 10 years back, ripe for innovation and potent to become a part of everyday life at scale. As a technology company, he said that Paytm will be at the forefront of this revolution. Paytm is on track for its vision to bring 10 crore merchants and 50 crore as payment users in the near future, he added.